capital decision making or capital expenditure decision making or capex planning or capital expenditure planning. Now these are the terms which are used by different businesses across the globe to signify uh, investment in their long-term plans. Investment in their long-term plans. Capital expenditure decision making, of course, is very critical for any business. And why is that so? Because no one on this earth, in any place, ever starts a business to remain stagnant. Anyone who starts a business with whatever capital, their ultimate intent is to grow their business very big in size, as much as reach to global boundaries. How that can happen? That can happen only in two cases. Number one, when you are making profit from your existing operations, and number two, when you are making capital expenditure, incurring capital expenditure, when you are expanding your capacities, when you're going for diversification and modernization. So whenever you, a company or we, whenever we are going for diversification or modernization or capital expansion, obviously we are going to make a huge investment into the capital expenditure. So now the question that we are going to discuss now is, how do we take those capital expenditure decisions? How do we take those decisions whether to invest money or not to invest money in a particular project? How to decide whether to reject a project or to accept a project, or how to do the ranking? Now, this capital expenditure decision making, friends, the planning, friends, depends on number of factors. What those number of factors are? Those number of factors are, number one is time value of money. What is time value of money? Is very simple. Value of money changes with the passage of time, and that signifies as time value of money. $100 in my hand today, 100 euros in my hand today are not going to be worth the same 1 year from hence or 2 year from hence or 3 year from hence. 100 euros in my hand today are going to be worth less than 100 euros 1 year from hence, even lesser 2 year from hence, even more lesser 3 year from hence. And that is the concept of value, time value of money. Value of the money changing with the passage of time is time value of money. And therefore, whenever we take any capital expenditure decision, we have to keep this factor in mind. We have to keep this factor in mind. Second thing that we take into account for the purpose of capital expenditure decision is the life of a project. Life of a project, remember, is important for us, because longer the life of a project, longer is the time for which we are going to generate cash from that project. So that means we are going to benefit from that project that much longer. And that is why in principle, for us in our company, in our group, it is of paramount importance to go for the projects which are of a longer life, because your cash flow are for the longer period. Third thing that we look at for the purpose of a capital expenditure planning is the incremental sales revenue. Obviously, when we are incurring capital expenditure, that capital expenditure sooner than later should also start generating incremental revenue. If I'm spending money incurring expenditure on a capital project, obviously it has to give me incremental revenue. Sooner it does it, better it is for me. Then the fourth thing that we need to worry about is the incremental cost. So the revenue that I will generate from a project on completion of a project, obviously that revenue generation cannot happen without incurring of the cost. So what those incremental costs are going to be in the form of raw material, in the form of SG&A, in the form of interest, in the form of depreciation, amortization, all that I have to take into account. Then the fifth thing is incremental investment in capital. So any capital expenditure will need money, right? It will need money, so that money can run into millions of euros or dollars, or sometimes it can even run into billions of dollars depending on the size of the project. So that is what we would need to take into account. And why do we need to take that into account? Because not only we need to know as to how much money do we need for this project, how much money we need to spend on this project, but we also need to arrange those funds for the project to be implemented successfully. Then we need to understand discount rate, and I'm going to spend more time on this discount rate because this is something very, very interesting and very, very critical for all of us to be able to facilitate the process of capital expenditure decision making in our organization. We will understand what is return on investment and how do we calculate it. We will understand what is NPV, net present value, and we will also understand what is IRR, internal rate of return. And finally, we will understand the payback period. Payback period, of course, very simple. When I'm investing money into a cap project, I'm investing, let's say, 100 million euros. Within how many years I will get this 100 million euros back? That is my payback period. This is one of the factor in capital decision making, and I'm sure you can understand, shorter this period, better it is for us as far as the investment planning is concerned, investment expenditure is concerned. So these are the factors, friends, we will need to take into account for the purpose, or we take into account for the purpose of capital expenditure planning and capital planning, capital expenditure planning, capital budgeting in our organization.